$16,000 in hidden dealer markup fees just got flagged by the FTC, and your business may have already paid them. Here's what you need to know right now. In the next 9 minutes, I'm showing you the exact dealer fee structure the FTC exposed, the specific card statement lines that reveal the markup, the negotiation framework to recover past payments, and the issuer protections that back your refund claim. By minute 6, I'll walk you through the audit checklist itself, the one thing most business owners skip that costs them thousands, because here's what's happening. 97 dealer groups across the US are being investigated by the FTC for adding undisclosed markups of $500 per transaction after you've already agreed to a price. A business owner making 8 vehicle purchases at $25,000 each could see $4,000, $16,000 in hidden markups over 2 to 3 years. When you layer in the tax depreciation distortion, because your cost basis is inflated by those hidden fees, the total damage to your business can exceed $25,000, and the statute of limitations for refund requests is narrowing fast. Let me start with the wrong belief, because most business owners have this one locked in. The wrong belief, when your business credit card gets swiped at a dealer or equipment vendor, the price shown on the agreement is the total you're paying. The advertised price, the negotiated discount, the tax, that's it. The card clears, the invoice closes, and you move on. Your statement matches the agreement. Problem solved. That's what most of us were taught. That's how pricing should work. But that's not what 97 dealer groups have been doing. The correct reality according to FTC enforcement filings from 2024-2025, these 97 dealer groups are charging business credit cards hidden markups after the advertised price is agreed upon. Here's how it works. You walk in, negotiate a $24,500 price on a fleet vehicle. You present your business Amex or Chase card. The dealer says, great. The deal goes through. But then, buried in the processor settlement statement, in fine print, or encoded in a processor fee that never appears on your itemized invoice, an additional $800 in card processing fees or merchant surcharge fees appears. This fee is not part of the advertised price. It's not disclosed upfront. It shows up on your card statement as a separate line item, or it's baked into an inflated final charge that was never explained. The FTC's position: this is deceptive. Regulation Z, the federal rule governing credit card fee transparency, 15 U.S.C. Section 1666J, requires merchant to disclose all material fees before the transaction is finalized. Burying dealer markup fees in processor statements or fine print violates that rule. The math on this is brutal. A business making 5 vehicle or equipment purchases per year at an average transaction size of $22,000 could be paying 5 transactions times $1,200 average hidden markup equals $6,000 per year in hidden fees over 3 years. $18,000 in unrecovered expense over 5 years. $30,000, but there's a second layer of damage most business owners don't catch: tax depreciation distortion. Here's why this matters. Under IRS Publication 946, the cost basis of depreciable property, your fleet vehicles, equipment, is the full amount you paid, including all hidden fees. If you paid $25,800 for a vehicle, but $1,800 of that was a hidden markup fee you didn't know about, your depreciation basis is $25,800. You're depreciating a markup cost that adds no value to your asset. Over a 5-year max depreciation schedule, that inflated basis can cost you $400, $600 per asset in extra tax burden. For business with a fleet of 8-10 vehicles, that's $3,200, $6,000 in unnecessary tax drag, compounded over multiple years. Combined with the hidden fee itself, the total business impact is $500, $2,000 per transaction. The delta. What you're actually losing, a mid-sized business owner making 8 fleet or equipment purchases per year at $25,000 each. Year 1, $8,000, $16,000 in hidden dealer markup plus $1,600, $3,200 in tax depreciation inflation equals $9,600, $19,200 total drag year 3. $28,800, $57,600 accumulated hidden fees plus tax distortions year 5. $48,000, $96,000 total impact. This is not a small rounding error. This is a material tax and cash leak in your business operations. How the FTC caught this. The FTC's enforcement action against 97 dealer groups was triggered by consumer complaints and undercover testing that revealed a pattern. Advertised prices were consistently lower than actual card charges. Agents purchased vehicles or equipment using credit cards, compared the advertised price to the card settlement, and found systematic markup fees that were never explained at point of sale. The agency's position is clear. These fees are deceptive practices under the Federal Trade Commission Act. Dealers are required to disclose all material fees before the transaction is finalized. Hiding them in processor statements, in fine print, or in merchant services agreements does not meet that standard. **, the audit. How to find your hidden fees. **, here's the specific checklist to audit your past transactions. **, Step 1. Pull 24-36 months of business credit card statements. **, focus on any card you use for vehicle purchases, equipment, or high-value vendor transactions. Export these to a spreadsheet. **, Step 2. For each dealer or vendor transaction, pull the original invoice or purchase agreement. **, the key number, the total due or net purchase price on the agreement. **, Step 3. Compare the agreement total to the card statement charge. **, if the card was charged more than the agreed amount, that difference is your markup. Document it. **, Step 4. Check your processor settlement statement. **, if you have access to merchant processor files from your dealer or the card issuer, look for lines labeled merchant surcharge, card processing fee, dealer service fee, or processing adjustment. These are red flags. **, Step 5. Search your email for processor agreement or merchant agreement. **, read the fine print for language like surcharge permitted or card fee adjustment. This language signals you've authorized markup fees, but only if they were disclosed. If you never saw this disclosure, that's evidence of a violation. **, the negotiation leverage. **, once you've identified the hidden fees, here's your negotiation framework. **, Frame 1. Regulation Z violation. **, reference the FTC's enforcement action by name and date, FTC vs. Dealer Group Name, 2024. State clearly, our business card was charged fees that were not disclosed at point of sale in violation of Regulation Z and FTC standards. This is not an opinion. It's the legal standard the FTC just enforced against 97 dealer groups. **, Frame 2. Refund demand. **, request a full refund of the hidden markup fees, plus interest calculated from the date of the original charge. Simple interest at the card zapper is defensible. Dealers have 3 options: refund, credit against future purchases, or escalate to their processor. **, Frame 3. Dispute documentation. If the dealer doesn't respond within 10 business days, file a dispute with your credit card issuer using your documentation, invoice vs. statement. The issuer's chargeback team will evaluate the fee against Regulation Z standards. You have strong leverage here because the FTC just made the rule crystal clear. **, issuer protections. Your backstop. **, if a dealer refuses to refund, escalate to your card issuer. Here's why this works. Under Regulation Z and the Truth in Lending Act, 15 U.S.C. Section 1666, cardholders have the right to dispute unauthorized charges or charges that don't match the agreed amount. A hidden markup fee, one not disclosed before the transaction, qualifies as a charge that doesn't match the agreed amount. Card issuers, American Express, Chase, Capital One, etc., have chargeback teams trained to evaluate merchant disputes. When you present evidence that the card charge exceeded the agreed invoice amount, and you reference the FTC's 2024-2025 enforcement action as proof that this practice is deceptive, the issuer's dispute team will typically rule in your favor. Data from the CFPB Consumer Complaint Database shows that disputes tied to undisclosed merchant fees have an 87% favorable resolution rate for cardholders when documentation is clear. **, the card rewards angle. **, here's another layer most business owners miss. The hidden markup also means you're not getting the full rewards value on your card. If you have a card that earns 2x points on business purchases, and you were overcharged by $200, you earned an extra 400 points on a fee that didn't provide value. That's a wasted rewards opportunity. When you recover the hidden fee through a dispute, you should also request a credit for the excess rewards points earned on that inflated charge. Issuers typically grant this without pushback. **, what to do right now. The statute of limitations for consumer disputes varies by state, but most allow 2 to 3 years of lookback for deceptive merchant practices. The FTC's enforcement action, filed in 2024-2025, has a window for affected businesses to claim refunds, but that window doesn't stay open forever. If your business has made major purchases from any of the 97 flagged dealer groups, or from dealers using the same fee practices, here's your action list. 1. **, audit your past 36 months of card statements today. **, identify any charges that exceeded the invoice amount. Time is running. 2. **, document the invoice to charge discrepancy. **, create a simple spreadsheet. Transaction date, dealer name, invoice amount, card charge amount, difference, and the reason given or not given for the markup. 3. **, send a written refund request to the dealer. **, reference the FTC enforcement action. Be calm and professional, but be clear. This charge was not disclosed per Regulation Z standards enforced by the FTC. 4. If the dealer doesn't respond or refuses, dispute with your card issuer. Attach your documentation. Reference the FTC action by case number. 5. Request a tax adjustment with your accountant. If you've already filed returns using the inflated cost basis, file amended returns. Form 1120X for corporations, Form 1040X for sole proprietors, to correct the depreciation basis. This recaptures the tax value you lost on the overcharge. Your credit profile is your leverage, protected. Every dispute you file, every refund you recover, every negotiation you win teaches the market that hidden fees don't stick on business cards anymore. That's how the market corrects itself. For the full audit spreadsheet, the exact language for your refund demand letter, and the case citations you need, check the companion resource from 580 to 800. The link is in the description. It has the 9-step framework for negotiating with